Hi everyone, let's look at my low time frame and micro scenario, starting with the more bullish Elliott Wave scenario on the Bitcoin chart, where I'm looking for this to be a wave A, B, and then a wave C to the downside, where wave B, most common target, is between the 1.236 and the 1.38, pulled from the high of 5 to the low of this wave A, which is between 29.6k and 30k, which also has nice confluence with the weekly naked point of control and the weekly right here, besides the fact that 30k of course is a psychological level. Then over here with wave Y, it did bounce very nicely in the target area for wave Y, but as you can see, the wick actually just missed out on hitting my target box, and usually I do like my target boxes to get hit, so this is a little bit awkward, but nonetheless we did hit the area for then the potential trading setup we had over here when, before price came down, is lettering the longs in this area, stop loss below, trading it for a wave B. By now it should be a break even. Of course, no financial advice in this video obviously, but this is how one can trade Elliott Waves using the Bitcoin chart in this case. So we then look to the upside because wave B has to be a three-wave structure. This most likely being the first structure. Then we have the second structure, which now starts to become quite complex. So the question is, did wave X end over here, or maybe it ended over here? Doesn't really matter, but I'll explain that on the micro time frame. Eventually we do expect then a move to the upside. Also, we have a couple of magnets, you could say, on the lower time frame. We have a double top over here more locally, but we also have the triple top over here. As you can see, this high, this high, and this high, it just attracts price in general. Of course, price can go to the downside, finally hit that target box, and then move to the upside, but just know that this often is like a magnet for price because there's a lot of liquidity resting above these highs that price would like to take. So in this particular scenario, we then have this as a WXY, where the target box for wave Y is at the moment over here, just below the wave B target area. But of course, price can wick in B, close in Y, and then eventually move to the downside. And also something that we have to keep in mind is that this structure over here can only be the first structure of this wave B. So this WX and maybe wave Y or whatever is going to happen over here is only going to be the beginning, before then a move down and then another move up, and then this is going to be like a WXY or an ABC. So that is something to keep in mind. This wave B can of course be extended in time, before then eventually we expect a wave C to the downside, with the potential trading setup, the short over here, lettering the shorts in this area, stop loss above the 1.618, as that is the rare target area for wave B in an expanded flat, before then a move to the downside. If you then look at the lower time frame, more bearish Elliott Wave scenario on the Bitcoin chart, I'm thinking about this being a WXYX and then eventually a wave Z to the downside. This is currently, in my opinion, still an alternative, even though we have been ranging here for a while. So in this particular scenario, wave Y bounced perfectly on the 1-to-1, which is what you want to see with a WXYXZ. That's the most common target for wave Y. And then the most common target for wave Z is between the 1 and the 1.236, which is basically the bigger white box that you see over here. Also in confluence again with the target box that you see on the chart, which is actually quite nice. And then eventually the potential long setup is putting the longs in this area, stop loss below, for then a trade to the upside for that wave B. If we look more locally then, again, this can then be a W. Then we have, I don't know what, like wave X. I used to have wave X over here, but I said in my previous videos as well that we could make another high, or at least somewhere over here, and then put wave X over here before eventually a wave Y to the downside. But as far as it stands now, the bullish scenarios are still my preferred scenario. So if we then go to the micro bullish scenario, Elliott Wave scenario on the Bitcoin chart, then what I'm looking for over here is, this is then the low of that wave Y over here, and then this is a three-wave move WXY to the upside in a bigger W. We had then the potential short setup that already played out, made the highs, reached the target area, created bearish divergences, short to the most common, or the most likely target being the target box over here, so that's of course closed. And then from this area in a WXY, you do not expect this low to be taken. So the potential long setup was to enter the longs in this area, stop loss below this low, for then the move to the upside to like 30k. Eventually moving to stop loss below this low over here when we came down again. Why below this low? Because it took the liquidity over here of basically 3 lows. And this for me is a good low. It's also below the target box. So yeah, I do expect this, if this low is taken, we could potentially go to that low as well. So yeah, basically you remove the, if this is a 1% risk, you now remove the 1% risk to then maybe like a 0.1% type of risk. But then we also made this low over here, and then yeah, I can move the stop loss up just a little bit again, like 0.05%, or basically almost break even risk in case price comes down again, because we make now over here a higher low, a little bit of a higher low, and I wouldn't like to break this structure at the moment, because then it does feel like price is going to move to the downside. So for this particular potential trading setup, this is again purely educational, how you could potentially trade based on using Elliott Waves and looking at what is happening on the chart, right? Of course, make sure you have your own trading strategy and entry requirements and all that sort of stuff. But in this scenario, we then have wave W over here, three wave over here, and then another 3 wave. So I used to have wave X over here, but wave X might also be here if one of these 3 wave is actually a bit extended. So we can have a W, maybe an X, and then eventually a type of Y, for example. Quite difficult to say, but the most important reason I'm still edging towards the upside is this target box so far has been well respected, but also the divergences are not showing bearish divergences. And it's, of course, divergences, they can be leading, meaning price is going to follow the CVD chart. So over here what you see is the CVD, market buys, market sells. And what you can see, if we take a look at the wick over here of wave Y, right, and we had this W up, X down, looking for upside, and then a wave Y, for example, you can see that both the lines, the yellow and the blue one, are making lower lows, but price made a higher low. So price is making a higher low while the CVD charts are making lower lows. That's a bullish divergence. And if we then look more locally over here, you can see the yellow line does not actually have any divergence at all. It didn't make a bearish divergence. It actually just missed out on making a bearish divergence there. Also not really a bullish divergence. It did actually over here. If we zoom in, you can see the yellow line, higher lows, lower lows on the CVD, but that already played out with the push to the upside that we got. But then the blue line continues to make lower lows while price is moving to the upside, which is a bullish divergence. So between this low and this low, the blue line made a lower low, and between this low and this low, again a lower low on the blue line CVD, which is a aggregated CVD from all the platforms online. So yeah, we keep making higher lows now, lower lows on the CVD. So that is another reason why potentially the end of this wave X might actually be this low over here, or this. It just doesn't really matter too much, right? So let me just put it back to actually where I used to have it. And that's also why the potential stop loss for this trade is moved to the upside, because yeah, you know, if we break those divergences as well to the downside, I can expect more downside to come. So yeah, on the lower time frames, I think that's also a bit of an Elliott Wave lesson. At the same time, it doesn't really make sense to try and count this whole thing. Yes, you can go to the 1 minute, 3 minute and try to be bonkers and, you know, try to count all the waves and measure everything. But in the end, from a trading type of perspective, it doesn't matter. Like either we go up and that's really great, or we go down and we literally break even, something like this potential long setup. But this starts to be very complex and we have to wait and see what price is doing. The only thing context-wise is what I've already done is, hey, we do have some bullish CVD. We do find support on the target box. We have a little bit of a rounded bottom, which usually is more bullish than bearish in this scenario. So based on the context, I would prefer to see upside. We have a double top over here, we have a triple top over here. So that is how I'm thinking, right? I'm not trying to count on the 1 or 5 minute, or, you know, now I'm on the 15 minute, but I'm not trying to count this at the moment because it is, or looks, by the looks of it, quite complex. And the moment we break out to the upside or the downside from this range over here, we will have more clarity. We just be patient. We are disciplined traders over here on this channel. And then the more bearish scenario is that wave A is this over here. So a 3 wave A, looking for this then to be a 3 wave B with then the X being a complex range. So then X might even finish over here after taking the double top, for example, but then X is going to be a complex range, most likely then in a WXYXZ, which usually is a horizontal structure, before then a move to the downside. So maybe after taking the liquidity of the double top, which we could do with the swing failure pattern, right? Move above, close below, move to the downside, absolutely possible. And also, I gotta say, these bullish divergences played out, or are playing out, the moment we take these highs. So the moment these highs are taken, let me do this, important. The moment these highs, this double top is taken, the bullish divergences that we have played out. So we do not necessarily have to expect higher. The moment we take these highs, the bullish divergences have played out on the local time frame. Yes, we do still have the higher time frame bullish divergences as well, where the main target is going to be these highs as well. So we got to wait and see how price is going to react if it takes these highs, and if it then moves up, or if it then goes down in this bearish scenario, where we are looking for wave B to the downside. Again, the target area that we didn't hit is interesting for potential long setups, and then eventually stop loss below, trading it to the upside. This is still an alternative scenario as well. It doesn't look as nice in an ABC expanding flat and then another expanding flat. And also, most common target for wave B is down here. I really don't like price to go below these lows in a more bullish setup, because below these lows there's not much support anymore. So yeah, that I think is important. So yeah, we could wick in this area, but close at least in the target box before upside. But then again, context wise, I would prefer more upside. So let's see what happens during Easter. I wish all of you a very good Easter. For the ones interested, I got second in the obstacle run as well. Got my medal and everything. It was great. Pictures will be in Discord when I got them. So yeah, make sure to join the Discord if you want to stay up to date with sports of the group. I hope this video was helpful or valuable to you. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.